Thousands of people worldwide are contributing to Parachain auctions, and until now, we assumed it was all of us degens and apes participating. Parallel Finance, though, now has the backing of VC giant Sequoia Capital, and they're proving that even the big boys want in on this game. Hi there, and welcome to the Parachain Auctions podcast hosted by Kraken. I'm Brian Hoffman, crypto platform product lead, and I'm glad you could join me out here on the cutting edge of crypto technologies. On this show, you'll hear from leaders and innovators around the world building parachains on Kusama and Polkadot. Tune in for insights from the best and brightest about their new projects. Whether this is the first you've heard of parachains or you're a DeFi aficionado, come with us behind the scenes as we explore the technology of the future today. Today, we have with us again Yubo Ruan, who's the founder and CEO of Parallel Finance. Welcome back to the show, Yubo.
Hi, hello everyone. Thank you for inviting me back again. Very honored and exciting. I'm excited.
Yes, I'm very excited to have you back for sure because so much has happened since we last
I
spoke.
agree. So much happened. Things are going really fast.
Yeah, and things seem to be going pretty darn well for Parallel. So since we last talked, you guys have won a Kusama slot. I think it was slot 10, which is pretty amazing. And also in much, I guess maybe even bigger news, we found out that Sequoia Capital is now backing the project, which is massive because my understanding is that they really haven't done a whole hell of a lot with DeFi or crypto compared to
Yeah.
A16Z and some of the other kind of well-known VC funds. But they have put quite a bit of support behind you guys. How does that feel to get that kind of validation?
How did it feel? Feel incredible. Pretty excited. Pretty excited, honestly. We are very motivated and at the same time being more feeling more responsibilities to deliver something incredibly good.
Yeah, I could speak from experience. It is a lot of pressure, I know, to have
Yeah.
a fairly well-known VC fund back you, but there are a lot of perks that come with that. What do you guys find that will likely be the most helpful thing that they will bring to supporting the project? Obviously, other than financial support.
Yeah, one is this sort of company building experience in terms of talent hiring. They have a very strong network and very strong talent partners to help their portfolio company to find extremely talented people to join your company. And then, second of all, I think is just sort of the strategic advice from their partners who have seen and invested over dozens of very successful company in the Silicon Valley, given some amazing advice on how to scale a company, right? How to hire more people in a healthy way, how to find a product market fit, how to do marketing, how to do stuff. Like, I think strategic advice is extremely helpful. Number three is access to additional future capital. I know this is kind of
Mhm.
the same, repeating the first thing that you mentioned about, but I think as the company grew, right, we wanted to have more access to capital, and with a strong top brand VC fund support, you are more likely to have stronger, uh, like capital support in the next round, in the future rounds, and even really good sort of brand effects for other investors who hop in. I think those are some of the main benefits from those like top tier investors.
Oh, definitely. And I guess seeing as the fact that they haven't really invested too heavily in this space,
Correct.
like how did they find you? How did they learn about you? How'd you get in contact with them?
How do we find Uh, so we know some common friends in between, and then that connect to some of their partners. That's kind of how we start the conversation, and then we actually keep the conversation going for quite some time, to be honest. Yeah, it's not like one day one conversation is done. It's a couple conversation over a couple of weeks. Yeah.
So what do you think it is that they find so exciting about the project? Like, what is the thing that's so promising to them in their minds? Do you think?
Mm. This is early stage investment, so the quality of the team, the potential of the team, and then the the track record of team actually plays the most important role. The second of all is obviously about the idea, about the product itself, the product and tech. Lastly, I think it's really about how much um, how much tractions we have over the course of the last couple months. Yeah, since we started a company and things like that. I mean, I used to be a VC, and I kind of know how a VC value a company based on different stages of their life cycle. They put different emphasis on different components of the company, and so as I said, early stage, like team plays the most important role in this evaluation process.
Yeah, definitely. I think early stage, it's hard to really make a true realistic judgment of where you're going to end up in the
Correct.
future. But obviously, looking at some really promising numbers, I know that I was looking at some of the stuff that you guys already have out, and it's looking pretty promising. Speaking of team,
Mhm.
how big is the team at this point?
We are at 35 people globally, and then we are hiring, and then we'll try to hit like 2 to 3 times within the next 3 to 6 months.
All right. So if you're listening now and you've got some skills, it sounds like you guys are hiring pretty ferociously. So they'll have to reach out to you. So let's take a step back real quick. I really appreciate the conversation on the VC side. It's really exciting for you guys. But
Yeah. Okay.
let's just quickly recap. Like, what exactly are you guys trying to do with parallel finance? I mean, last time we spoke about Heiko, what is parallel finance, and what are you guys doing differently for Polkadot than what you've done so far with Kusama?
So Parallel Finance is this holding company that build DeFi applications that we aim to impact 1 billion people. Parallel Finance and Heiko Finance is one of the product group that we developed at the beginning that is designed to solve Polkadot ecosystem DeFi issues or DeFi demands. So we build a application specific chain that provide financial services to dot ecosystem token holders, right? So the services not limited to things like crowd loan markets, to money markets, to AMM, to liquid staking, leverage, futures, options, and things like that. I would say like it is a chain that handles all of the financial demands for typical dot holders, Kusama holders, or the sort of ecosystem asset holders in the space, right? So that's what parallel finance and Heiko finance is about. And then we are taking this Apple approach where we, as the developer, build all of the applications. We do not have the EVM chain. We do not have this capacity to allow other developers to build because we position ourselves as the developer, if that makes sense. So we're not trying to be a
Mhm.
EVM compatible chain, and we're not trying to be develop our own sort of dev ecosystem to allow other people to build. We directly build application to the consumer or to the Polkadot ecosystem, like players or users, and then they can directly use our products. And then we're gonna roll out a lot of products. So that's kind of the what we're trying to do in the Polkadot space.
Yeah, it's a really interesting approach. It's obviously fairly different from some of these other projects that kind of like build these frameworks or these SDKs or EVMs, and people will just let them build what they want on top. But you guys are kind of going down this road where you have these bespoke applications that are like high quality.
Hmm.
One of the products that you guys have released is this crowd loan
Right.
product, which I think I just checked like earlier. You guys are like almost, it's like close to $600 billion in dot
Uh,
TVL on this
yeah,
platform
yeah.
already.
So if you go to analytic.parallel.fi, we are the market leader for crowd loan solution, 100%. And notice this product just launched for less than a month. And then, yes, it depends on the dot price, obviously. So it's around $600 million worth of dots locked up into our system, which is over 1.5% of total dot lockup in their system. Just to give you examples, like, for Lido Finance, they have probably 1.1% of total ETH lockup in their system. And then we are around 70% of Binance total volume, right? So Binance has around 20% of the total market share. They handle around 20 to 21 million dot in total. Binance is a very established brand in the space and has been there for a while. and then we are around roughly 70% of how much they handle toward all of the projects. So yeah, this is a beginning. All of the all of the users are able to receive liquidity token, which we call it C dots, and also C project token. And then those derivative token are able to provide liquidity. So that's kind of one of the main benefits that people wanted to use to contribute to different projects.
Yeah, it's a really cool product, and I think I misspoke earlier and said 600 billion, which would have been pretty amazing, but it was million. Sorry, awesome, but not quite that awesome. So you guys won slot 10 for Kusama, and it's been a little while since then. But like, what has been really kind of the most challenging thing for you guys since winning the auction? Like, what have you guys been up to? Any unexpected things happen in the last few weeks as you've been building out that?
Yeah, I think we are just really busy with rolling out new product after, because we try to build all of the DeFi related stuff. So after people use crowd loan, many of the users are asking for AMMs, right? Asking the DEX. They want to trade
Mm-hmm.
their C dot. They want to trade their dot against dollar against different stable coins. So we're trying to roll out this product. Many people want to use the money market, use the C dot as a collateral to borrow, and then so we just follow most of the users' demand and then trying to push product outside. Nothing really unexpected. We are still on track. This is all planned. Like on Q4, we plan to launch this product. We plan to take some meaningful market shares, and we plan to launch our DEX, our money market, and fully launch parallel. Q1, hopefully we are already able to handle most of the DeFi sort of services for all of the dot holders and Kusama holders. That's everything's on track. We just need to be like work extra hard and provide stuff to the market.
So far, your Polkadot crowd loan has had about 4 or 5 times as many contributions in US dollars value than your previous bid. Has that been like shocking to you, or is this something that was in line with your expectations? I mean, that seems pretty tremendous to see that kind of support.
Yeah. I think, to be honest, I thought that it's going to be 10 times more, just because the Kusama and Polkadot ratio is around 10 times.
Mm-hmm.
And what ended up happening is that after the first two slot, I think the whole market dies down, and then the market also dropped. So the sort of the demand of getting to crowd and invest has been decreased. So I feel like, yeah, it is under what we expected, and it also shows some interesting parameters, right? So the first two winners got 35 million ish dot, and then the second two, which is a star and us, was around 10, which is pretty much one third. And then the last two right now is like one third of us.
Mm-hmm.
That is essentially an exponential decrease, decaying like a curve. I think people probably understand the um, the value of winning a slot early is not as high as they think. First of all, uh, the launch date of the whole batch one is actually at the same time, which is December 16th. And then I strongly advocate that there shouldn't be too much competition, because there's no point. I mean, as long as you get top five, everyone launched the chain at exactly the same time. I don't see there's
Yeah.
tangible difference, to be honest, to be a specific numbers. And in the long term, it doesn't really matter. In the long term, what matters is if user use your products, right? That's what really matters. So I seriously suggest to don't think in a very competitive way. It doesn't really matter on the sequence. And then second of all, just once we see all the Kusama 48 slots releasing schedules, then I think people won't have too much demand to get early, just because every single week or 2 weeks there will be one slot open, and there are a lot of projects can get a slot at a 10% of the cost for the projects right now. Then there's just not much incentive for people to come in, and that is what causing the demand of dot going down. And number three is probably the unlocking period. It takes 28 days, so the market react kind of slower than before.
So, we saw some kind of interesting stuff going on with the first two Polkadot
Yeah.
crowd loans.
Mhm.
Moonbeam and Akala, they started to kind of like, like I think they stopped their contributions for a little while. And
Yeah.
like there was like kind of this back and forth.
Mhm.
Like, what do you think could have been done better around that? Like, that doesn't seem like that was very well planned. Like, did you guys think hard about what you would do if maybe it became oversubscribed, or because it sounds like you were planning for it to be like even bigger than it is. How did you change your thinking around the cap and like how you'd approach this auction versus the Kusama one?
So first of all, like, in the end, all of it depends on like what's the goal, right? So if we try to raise as much as dot as possible, the benefits is that we can win the slot early, and then the downside is that we dilute the return for all of the investors. And then I don't necessarily 100% sure how like helpful is it to be that fast to earn a slot when you are pretty sure within the first batch or second batch. So I would say that, to be honest, just be a little chill on the process and set up a reasonable cap, which is similar to what other people said. Maybe just a little bit higher. Start early. Um, I think using parallel platform to start early could be a very strong strategy before the actual auction, like start to do crowd loans, and I think like provide some extra incentive for people to join early will be extremely helpful. We have a strategy to provide 40% additional bonus if they join before the first auction started, and we extend it for 48 hours. It actually played out pretty well. Just a lot of people really want to support earlier. So yeah, I think in general it really just a really good way to make more people get involved. So to a launch of a project.
Yeah, it'll be interesting to see, going forward, if there will actually be enough projects to support all of these slots. Like Kusama, we're already starting to get like, yeah, there's a lot of products. But I mean, you make a good point around not, is it that important to have 600 million dot put onto your auction bid? I don't know. I don't know if that's true.
Yeah, yeah,
But one thing I wanted to ask you is like,
mhm.
so when we kind of initially started talking about parachain auctions
Right.
internally,
Mhm.
we were like, well, there's this mechanics where you're locking up your dot for this period, and then you get these other tokens, and then you'll get your tokens back at the end of the period. But now there's all these liquid token solutions that have kind of like messed around with that whole dynamic. I think a lot of the our customers are asking like, oh, is there a way we could have liquid get out of this? Do you think that do you think it's a good or bad thing, or maybe it's just neutral, to have all these like liquid options for people to kind of get out of these bonded
Yeah,
tokens? Do you
yeah,
think it
of
messes with the
course.
dynamics of the auctions?
Yes, of course. I think this is a natural progression of all of the illiquid market, which is some of the entrepreneurs in this space would find this pinpoint and try to provide liquidity for the users. Some examples for you, right? So um, convex finance, which is essentially the liquid version for curved lockup tokens, KRV 4 years lockup tokens. A lot of people want to do 4 year lockup, but then to get a boost on the CRV rewards. However, 4 years is a long time, so convex come out and then say, hey, let's all vest through our platform, and then we're going to give you the convex curved CRV tokens, which is fully liquid, and you can also earn the pro rata returns from other the boost returns. And then they're doing pretty well. One of the top DeFi on Ethereum. Lido Finance, right? ST is, I mean, ETH2 staking right now is not liquid, right? You don't really know when exactly is
Yeah.
the redemption date, and now ST is extremely liquid and they trade on curve, and yeah, I think that liquid dot will be or the crowd loan dot have to be liquid, and then the market be just because people have the demand. Real everyone want liquidity. Liquidity worth a lot of money given how much volatility we have on the crypto markets, and it's natural for the capital to realize that this is actually way more important than the return itself. Just because how much opportunity cost you are giving up, then naturally more people are going to choose this sort of like liquidity over some levels of rewards. And so, yeah, I think this is a natural progression. I can see that more higher percentage that will use liquid solutions for the second batch. And frankly, there are some projects that work with us exclusively just to provide their users for all of the sort of liquidity, and then that will coming up sometimes in the batch two. And I think it's a win-win situation for all of the projects.
So this round of auctions are, the Polkadot auctions. We saw a couple other players jump out in the exchange space. Binance added the
Yeah.
ability to do parachain auctions. Do you think that this has contributed a lot more, brought a lot more people into the space, or do you think it's just spread out like who's contributing where? Do you think it's been like a net positive for the space?
Generally it's not positive just because a lot of users actually weren't really aware of how the crowd loan works, and then a lot of users aren't able to manage their capital for the rest of 2 years. So exchange like like Kraken, Binance are a really good choice, and I think it served as a really important channel to educate people. And then a lot of projects provide additional rewards for those exchanges, and so yeah, that actually incentivized more people to come in. And I would argue that if there's no changes providing the solution, then we will see a little bit lower amount of participation from the DOS space.
So you now have Sequoia invested in you guys, and that's I believe my understanding is that they invested in like your corporate business
Sure.
outside of the project.
Yeah.
Are they also contributing to the crowd loans? And if they are or aren't, are there other institutional investors that you're aware of that have been jumping in on the crowd loan?
Yeah, there are some really big institutions as institution backers of Parallel contributed to Parallel crowd. And I mean, it really depends on if they have a big bag of dot or not. Some investors don't, some investors do.
Yeah.
It's an option for them to invest. We're not. Yeah, it's really an option.
So one of the kind of like questions that always comes up in great frequency at Kraken around the Parachain auctions is, what are my rewards going to be? Like, what's the rate?
Sure.
Is it just doesn't match with other places I'm seeing it listed? It seems like the whole rewards calculation is like a very complicated process. In fact, I think Moonbeam actually recently simplified their incentive program. What's been the most challenging thing about like creating the right incentives around the rewards? Like, do you think simple is better, or like, what have you guys learned about that?
Um, I think honestly, it depends on who you want to attract, right? We did some data analytics. A lot of the capital actually contributed from top like 100 addresses, and those. Okay, so the the demand, you have to think from the perspective of investors, and then the investors have a spectrum of how much capital they have, right? From the smaller investors who hold less than $100 to all the way to the investors who hold over $1 million, right? They are thinking in a completely different perspective. For the smaller investors, so first of all, from the institutional investors, they're thinking their priority as first security, second liquidity,
Mhm.
third rewards. And for the smaller investors, actually quite the opposite, right? So if you invest less than $100, right, security is not the number one thing. The reward is number one, liquidity number two, and then reward number one, and then the liquidity numbers, and then the security number three is complete opposite. So it really depends on who you want to attract, right? The more complicated system you design, the more favorable for those retail investors because they care about those little rewards, 20% early bird, 10% early birds, referral bonus, this and that. And for institutional investors, they kind of ignore that in a way that they think, okay, this is too complicated. Sometimes they don't even want to set up a wallet just to get that 5% because it doesn't really matter, right? They want to do a long-term
Yeah.
investment that hope for something like a 10x return, 20x return to bet on a team for long term. So it's not that important. And then, however, the funny thing is, in this whole capital world, the majority of the capital is controlled by a very little amount of people, right? 80-20 rules for 10-90 rules. So 90% of DOT is actually contributed to 10% of total contributions. If you look at the whole chart of 200,000 contribution in the whole space, majority of the capital, I would say I would argue that over 80% of capital actually come from that little 10% of the contributions. So if you are projects, you wanted to target for those institutions, then think about how to make it really secure, how to make it really liquid, right? That is more important than the reward structure, and try to make it simple, to be honest. Like the more reward structure they have, the more institutions have to think about it. Okay, this reward, that reward, when should I come in, when should I come out? That's complicated. For retail investors, if you want to increase the amount of users to hold your coins, right, that's a different mindset, right? Do you want to have easier win with like a couple of big institutions to support, or do you want to have a more decentralized distribution of your token holders, right? If you want to go through this path, right, then I do think that it is important to have different levels of rewards given time and probably like like how much they refer. That at least this is the norm for most of the crowdfunding projects. If you don't do it, then it seems like it's very different than any other projects. Yeah, so I mean, from the retail investor perspective, they think in a what do I say? Like they want to be fair, right? They want to trade it as fair as possible. So they want to compare with other projects. There's no absolute fair. There's only relative fair, right? So if any other project doing early birds and doing referrals, and then your other project don't do it, they're gonna feel like, okay, what's going on with you, right? And then why would I participate in a project that really greedy? So I think yeah. So as I said, like if you want to go for this sort of really decentralized passion, path to get as much as like retail contributors, then I do think some of the incentive will be extremely helpful. Unless you're already very established, so you don't really have to do anything. People are going to invest anyways. That's another perspective, which is sort of this y-axis, how much of this reputation you have already in the space. If you're a Moonbeam, right? Honestly, you don't need to do anything. You can get most of the capital. That's pretty established, brand names and pretty established track record. If you're a completely new project, then I do think that it's important to have some mechanism to get people excited because of some of the incentive that you provided differently than other projects.
So you just brought up Moonbeam again. That project has been pretty popular within the Polkadot space. It's directly squared at bringing Ethereum EVM type software over to Polkadot, which is kind of the opposite of what you guys are doing, right? Like you guys are trying to build your application ecosystem. When you see that being so successful, does it give you any pause about your strategy at all, or does it encourage you to go out and create something that differentiates from that?
Yeah, we okay. To be honest, like think about this way, right? So depends on who is the customers, right? As I said, like for there are many customers in the whole sorry, if we jump out of the whole like Polkadot space, right? There are this Ethereum like users. There is this L1 EVM compatible chains users like Avalanche, Polygon, Phantom, Harmony, and then so those users are more like I think are easily going to be easily attracted to the sort of the Moonbeam's ecosystem. And to be honest, the most important sort of customers of Moonbeam is actually the projects itself, right? The literally contract developers, right, who already established some stuff in the Ethereum space and they can easily develop on a Moonbeam ecosystem. So they're a platform, they're a layer one chain that is EVM compatible, but give access to the Polkadot system. So their target customers are essentially different than what we're trying to target, right? I think it's great to have, it is important and it is critical to have a successful EVM chain in the whole Polkadot space. It is very critical. However, at the same time, like we are trying to solve another levels of problems, right? If you think about this way, right? So the whole like Polkadot system, most of the people are still using Polkadot JS wallet, right? They're still sort of using Polkadot JS web app to do staking, and then there's no way for them to do anything beyond staking at this moment, right? So we try to target them, right, those like Polkadot dot holders, and then directly provide services so that they don't have to switch different wallets. They don't have to go to new applications. Okay, just to give you examples, right? So if you want to do a EVM compatible chain, it doesn't have to be a Moonbeam, right? Any EVM compatible chain, and then if the chain itself is already like native EVM, right? That's simple, right? So you just switch your MetaMask, and then all of the assets are there, like Avalanche or Polygon, right? So that's easy. You just do a cross-chain transfer and all of the asset will be here. For the case of Polkadot, it's actually a little bit different. Most of the native tokens are in a native chain. And then if you build an EVM chain instead of native Parachain, then there is actually a glue code between the EVM environment versus the whole like Parachain native environments, right? And you have to transfer that. We think that this is kind of complicated, right? You have to first have Polkadot wallets and then you have to transfer to the EVM environments. And now you have two different Polkadot balances, right? Dot balance in your native chain, dot balance in your EVM chain. And now if you want to use any application, you have to switch between, all of the apps, right? If you use Aave, then you go to Aave and then go back to the other chain. So that is the sort of the problem that we see, right? We want to make things 10x simple and 10x more efficient. So the only way to solve that, for a non-EVM native chain like Polkadot, is to build native applications, right? So that's why we built exactly like application levels of application specific chains that solve those issues. So user connect with their wallets, whatever wallet they're using, the most simple wallets, and then they can earn yield, they can borrow and lend, and they can trade by one click. They don't have to worry about anything. And that's the point. The point here is to help them earn yield, help them increase their liquidity and increase their financials, have the most easy financial access to them. And then we can directly, sort of acquire those users in a faster pace versus if we do an EVM chain, then okay, then we have to business BD to those like bigger projects, and then they have to deploy, they have to integrate. That take time, and then the user experience is actually not as good as a native solution. If that is clear. So I'm trying to say is that we are trying to solve a very different problem that Moonbeam is trying to solve, and I think both chain have a lot of space to grow, and this space is growing anyway. So
Yeah, you brought up a bunch of good points there. The one that always fascinates me is like this crazy dependence on MetaMask, right? It's
yeah,
just
yeah,
such a
exactly.
yeah, it's just such a pervasive piece of software, and everybody uses it. But it's like if you don't have that, then you got to kind of replicate it somewhat, because people are starting to like understand how that works, like that mechanism of participating in DeFi using MetaMask and that the way that it works. So,
That's the problem.
what
You
are
see, like
yeah.
Moonbeam, right? So Moon River, the Dexes, right, on Sushi, on like Solar Beam. At least, like I maybe I'm wrong, but I still cannot trade like Kusama stuff. It's just like a little bit complicated for me to really like. If I'm a native Kusama user, it's hard. But if I'm native Ethereum user, I want to trade against like Ether, other tokens. That's pretty easy, right? So I really think it depends on who the customer they want to target for.
Yeah, the other piece of the puzzle that's really kind of scares me sometimes is like all these bridges and kind of going between the different networks, because I think those are areas where it's ripe for people to get confused and perhaps lose money, or do
Hmm.
something stupid, or to use bridges that are not trustworthy
Hmm.
because they just don't understand how to assess that properly.
Hmm. Correct.
So I
Power
think
bridges.
it just seems like a kind of a wild west that's got to get
Correct.
sorted out somewhat. But it sounds like you guys are trying to like really kind of build a brand around really trustworthy apps that are high quality. We spoke about the crowd loan app. What other products do you have out there right now, or coming soon, that you can talk a little bit about?
Yeah, yeah. So we are going to release the DEX and then the money market and liquid staking by Q4, hopefully in a month, and then starting with Heiko and then immediately transfer to Parallel. User are able to. It will be the first app for sure, and that they can able to deposit their DOT to earn yield on the money market, just similar to Aave and Compound, and then you can borrow dollar like stablecoin. I'm talking about real stablecoin like DAI, USDT, USDC, and all of the familiar stable coins that they want, and then they can also trade dot against dollar easily. They can trade against anything they want, like project tokens, because we already have around 600 million worth of dot lockup in the system, and we're going to generate C dots they can trade, and we're going to 600 million worth the exact same amount of C dot we're going to generate. So our TVL double at that time when we launch and issue the tokens, and then we're going to generate a C project token like C glimmers, and then C Akala, C Upstart, and all of the tokens. And by the way, like for Moonbeam, we contributed around 10%. So over 3.4 million of, like basically Moonbeam raised 35 million dot, right? We through Parallel, there are 3.4 million dot just contributed to Parallel. So we have around 10% of total crowd loan allocations, which is maybe like 1.5% of total Moonbeam supply. So 1.5% of total Moonbeam supply should lock up in our system, and then we're going to generate another derivative token called Siglammer. And then the good idea here that we have is that the Glimmer token is going to lock up for the next like 96 months with a 30% unlock at day one. However, if you use C Glimmer token on our platform, everything is liquid. Just like how the C dot is liquid, for the dot, and then we have
Hmm.
this derivative token on top of their, Glimmer token, stuff, and so people are gonna trade C Glimmer against Glimmer, and then people can actually, trade C Glimmer against dollar, and anything they want, they can buy it. So it's kind of like a new future market that we design. And so DEXs and money market and liquid staking will be the big ones. And then we estimate that there are a lot of users are very interested to directly deposit their DOT to use. And so yeah, those are the kind of the main application we want to push forward. One more, which is this sort of yearn for Polkadot, like yield aggregation for Polkadot. So user can use Parallel as a platform to do liquidity mining on other chains, right? So for example, if you have a star token and now it's locked up into our chain, and now you can actually click on one button and tell Parallel, and Parallel are going to use this XEM channel that we built between us and the star to help user to do liquidity mining on their behalf, and then transfer them back to the users. And actually, everything is aggregate together, so everyone is much easier to earn yield, and they don't have to, okay, let me transfer my star token out, and then let me redeem it, and then let me go to their chain and then use their wallets. It's kind of a mess, right? So you want to make it simple. So we're gonna do this sort of Yearn app, but it's cross-chain version of Yearn. And
Yeah.
so any chance that we support, you can do liquidity mining.
So one of the concerns around a lot of these DeFi protocols is that people are finding kind of like exploits, or they're finding like weaknesses in these and kind of exploiting those. And on the EVM side, there's a lot of like copy paste going on. There's a lot of people looking at this code. For you guys, it's just you guys building it. How do you guys think about the security of the products that you're building? Like, what does the audit process look like? What do you guys do in order to make sure that those protocols that you're building out are
Yeah.
actually really trustworthy?
Yeah, 100%. So we spend a lot of money on auditing, and then we honestly work with the best auditor in the space. So one of them is 12 Bits, definitely the big name in the space. And then we are starting the process in about like a month ish to re-audit the whole things that we build. And then we also work with Hellborn, which they help with like Aave and a lot of the DeFi protocols. And frankly, they work with us on a constant basis. It's not like one-time audit. We actually pay them. We actually buy out their time to work with us every single day. Like, you know what I mean? Like, it's a constant
Mhm.
auditing process. Every single code that we write, every single PR, like post pull request that we submitted, they will look at it. And so we also spend money on to multiple other, security auditing firm like SecVault, and you already work with them multiple times. We work with Thomas, and then, we're adding on a lot of more auditors to help. And then we also have a sort of a XCM firewall. So any money that I want to transfer out of our chain would subject to some levels of security preventions on our chain. If there's a false transfer or a malicious transfer, then our chain will be able to detect and then actually stop this process from happening. And then so the security side, we actually put on a lot of efforts and make sure that it is extremely safe. And then I think as long as the money is in our chain, it's much easy to sort of to make edit and changes, if you understand what I mean. Because most of the parachain have this sort of one red button called emergency shutdown. You can actually shut down the chain to restore the the malicious, or to restore the states of some of the accounts. And then so the critical thing is to make sure that all the XCM transfer out of our chain is being monitored and being regulated. Then we're good, relatively speaking.
Yeah, it seems really complex to be able to manage that properly. And I think it's only going to get crazier as time goes on, especially with all these derivative tokens and everything else flipping around. So, so just to kind of recap here, you
Yeah.
guys have been on a tear. You got two chains pretty much getting ready to go live here,
Mhm.
and you have all this money invested in you. So where do you see Parallel in the future? Are you guys going to convert into a DAO? Are you going
Yeah.
to remain a big corporation? Are you going to do
A big
both?
doubt, for sure.
What is the future? What lies in the future for you guys?
Yeah. So as I mentioned multiple times, like Parallel have three important mission, like three numbers. The first number is 1 billion people. So we want to bring financial inclusions efficiency to that 1 billion people. And second of all is that we want to bring 10 times better product, at least 10 times better products to anyone else than compare with anyone other provider in this space. And number three is we want to make sure those creations that we have is can impact people in a positive way in the next at least 10 years, right? It's not like one day they use it and then the second day they forget about it and they use something else. So in the long term, Parallel would build or we are actually already started to to do R&D on other chains, right? So the whole Ethereum compatible ecosystems, and then we're building different solutions. It's not related to anything we build on the Polkadot space. We have planned a very 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 exciting projects, and then that will be on the multi-chain levels, and it would have potentially have a separate token, will have a separate the completely separate products and different things. And then that's the second step is actually on our website. How do we achieve this a billion people like roadmap. Number three is that once we have those like multi-chain applications, especially for the EVM compatible like layers that we've done, then then there will be a very interesting strategy we're going to play that will eventually let most of the people use that on a daily basis, use our app on a daily basis. So yeah, long term wise, it's a hybrid thing. I mean, it would be multiple DAO that is on a backend to provide financial services in a very efficient way. But also we will have multiple corporations or entities or like LCs, C corp on the front that we build consumer app, like extremely simple, extremely easy to use consumer app that anyone, like even just um, someone that is like never understand about crypto can be able to use, and from like third world they can be able to use. So those are two separate things. And then Polkadot is kind of like part of this backend product group, is one part of it that we wanted to build. And then the connection between them is really depends on how we think about a long-term strategy. I think it will be so all of the application we build, it will be a subset of what the front end can support. The front end essentially can support multiple backends. What I would say like is bridging to multiple applications like DeFi applications or any interesting blockchain dApps. And then the front end is actually the one that acquire actual users and help them easily onboard with the whole like crypto world.
Yeah, that sounds like a really exciting future. I mean, I can't wait to see how DAOs are going to fit into just kind of the landscape. At some point, they won't be so novel and they'll just be part of our reality.
Yeah.
We recently just heard about they're creating Bitcoin City.
Oh my.
So, do you think there will ever be a Polkadot City, or do you think that this is not going to live long?
Polkadot City, huh? I actually haven't really thought about that, but it's interesting to mention about that. Are you saying that everyone in the city use Polkadot like dot token as the settlement like currency, or what do you mean by
Exactly.
yeah?
Exactly.
Hmm. Then we probably need to have a really good stable coin for the Polkadot. Like, what if like Polkadot really took off, right? Because of the city and because of people use, and then the value could go up. I mean, if you look at the quantitative theory of money, MV equals to PQ, and if you think about dot as the actual like currency that people use, right, and then assuming that people use it every single day, so the velocity is very high, right, and then depends on the supply. The supply is fixed, then price would actually go up, right? So it's interesting.
Yeah, there's a lot to think about there, and I'm fascinated with the way that people are trying to adopt this. It seems like things that I never dreamed would ever happen with crypto, or were just almost impossible to imagine, are happening now, and seem realistic. Well, thank you so much for having such a great conversation with us again today. It's really fun talking with you and learning more about Parallel. I think it's a super interesting business, and I hope you guys do the best. So last time you came to talk to us, you kind of hinted that you had a big announcement, but you couldn't really reveal it, and we found out what it was. Do you have any interesting announcements or anything you'd like to bring up that I haven't already discussed today?
Um, Not this time. I think the uh, not this time. Yeah, just we are building a lot of stuff. Maybe something big coming out Q1 next year.
No Series A's, no Series B's, no.
Yeah, or we do have a lot of investor reaching out for sure. And that's what
Yeah.
I can say. Some like really big name that you guys can't even imagine. So we will do a round, and then likely to be next year. And then we just want to run a little more data, and then we're pretty confident that we will keep the mission going, and then one step by the other step to achieve that. And then that mission takes us multiple years. We'll see. And yeah.
All right. Well, the future looks super bright for you guys. Where can everybody once again go to find out more about Parallel Finance and Heiko?
Yeah. So right now it's just really just parallel PARALEL.fi on our website, and then we have a couple channels like Telegram, Discord, and then like we have a lot of channels to really, for example, the podcast is a really good way to learn more about it.
All right. Well, thank you so much for stopping by. Great talking with you again, and hope to have you again soon.
Yeah, 100%. Thank you.
Thanks again to our guest, Yubo. It was great learning more about Parallel Finance's Polkadot project. Make sure you like, subscribe, and review us on your favorite podcast platform, and we will be sure to bring you along as we get a backstage pass to the world of Parachain auctions. And until next time, I'm Brian Hoffman, and this has been the Parachain Auctions podcast.
This content is not financial or investment advice. All interviews and discussions are opinions only. Kraken does not endorse the accuracy of this content. None of the following information should be construed as a recommendation to support any specific Parachain project or to participate in Parachain auctions in general. See our terms of service for more information.